Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey, gang, welcome back. You know what? We've interviewed all sorts of folks in all sorts of different real estate categories, from single family homes and flips and notes and, wholesaling, and then in multifamily, then industrial and flex and mobile home parks, and you name it. We've interviewed somebody in it, except for this particular category. And we're going to be talking about timberland real estate investing with John Brenard from Southview Timberland Investments, zooming in from Atlanta, Georgia, I believe, if I'm not mistaken. So, John, welcome to the show. Great to have you.
Thank you, Dave. It's a pleasure to be here, and yeah, excited to jump into this topic with your listeners and educate and kind of go over how our strategy works, but just broader knowledge about how the asset class works. So, looking forward to diving in.
So, if you're watching this on the YouTube channel, you'll see that behind John there is a big green screen of forest, and that's what we're talking about. So, John, maybe just explain to folks. What are you investing in? What is this thing you call timberland?
Yeah, so it is a form of real estate. So, that would be familiar to your listeners. You buy the property, typically, fee simple, you own the land outright. But what is different is, the asset on the land is timber, and that timber is growing on an annual basis, and you can harvest that for cash flow. And so there are other things you can do with the land as well, and we can dive into those things. But at a base level is you're buying typically rural land outside of cities, and it has this productive timber on it, which you can harvest for cash flow.
All right, cool. So you basically are buying private forest land that you can eventually harvest. Now, yeah. Are you the guys harvesting, or are you basically the landlord and then you're getting other people coming in, actually cutting down the trees and milling things and all that kind of stuff? How does that side of things work?
Yeah. So, the way that we do it, and, the way a lot of, other investors do it, is they just own the land, they manage the timber. And then when it's time to harvest, when the prices are strong, they'll go and hire a logger to take that timber off the property and transport it to the mill where it's sold. So, it can be a fairly asset light type model where you're just managing the land, managing the timber, and then hiring who you need to do that, specific service at that time.
All right, John. So the questions that are coming to my mind are, it sounds interesting, sounds a lot more appealing in a lot of ways than dealing with toilets and tenants. Still might have to deal with termites. But I guess the question would be time frame, because is it like an all at once kind of thing? If you're harvesting the timber, are you harvesting it all at once and then you're kind of done, and then you have to wait 30, 40, 50, 60, 70 years for the stuff to grow back? How does it work time-wise?
Yeah. So in our region, and just to give that background, we invest in the Southeast, big emphasis on the state of Georgia. Georgia's the number one forestry state, so very strong timber markets. And, what I mean by that with the timber markets is, when you buy a timberland investment, you want to be close to a sawmill. So you want to be close to be able to transport that product. And especially with fuel prices where they are, you want to be close to a mill to be able to sell that timber. But in terms of time frame, because our region is so productive with timber, you can typically buy a property that has mature timber on it or various age classes. So, let's just say you buy 500 acres. A third of it may be timber that's maybe 3 to 5 years old. Another third of it is maybe 10 to 12 years old. And then the other third is 20 plus years, which is ready to be harvested. So just because you buy a property today doesn't mean you need to wait 20 years to get cash flow from it. because you can buy properties that have that mature timber on it already.
Who's typically selling these properties?
Yeah, so in our region in the southeast, and it's can be different than other parts of the country. Is most of the land, upwards of 90% of the land, is owned by individuals like you and me, Dave. So it's a fragmented market. There's opportunity to find deals from individuals, but yeah, typically individuals, third, fourth generation, families that have had land in the family for years. Maybe the folks who inherited it don't want to manage that property anymore. They want to live in the city. And that's where, we're able to get, these deals from, because we live and work, in these regions, in these rural regions. And a lot of my team does as well. So it's just, individuals like you and me primarily that own the land.
Very, very interesting. So maybe walk me through a relatively recent purchase that's, I don't know what we'd even call it. I don't know if it's gone full cycle. What is full
Sure.
cycle? Because it's recycling. I mean,
Yeah.
yeah. How does it kind of work? Walk me through it, like A to Z, if you don't mind, John.
Yeah, so I'll talk about our strategy and the way that
Yeah.
we approach investing in it. And, we like to emphasize that we're a land and timber company. And what I mean by that is, the Southeast in the last several years has seen this big growth in population moving to the Southeast. You have a lot of businesses moving to the Southeast for different reasons, affordability, lower taxes, better climate. And so what that's doing is it's putting upward pressure and demand for land in this region, only, and typically right outside of these growing Southeast metros like
Mhm.
Charleston and Savannah, even, places like Ocala, Florida. And so what we're doing is we're targeting properties of, a couple hundred acres up to maybe 1,500 or 2,000 acres. We like that size because it's below what the institutions are going for. The big
Okay.
institutions, they're buying 10,000 acres or more. And so when we buy one of these tracts, it's not just only about harvesting timber. It's also about demand for the land for different reasons. Businesses are looking to expand, developers, people using it for recreation. That's huge in our region.
Mm.
And then there's the opportunity to harvest that timber over time when the prices are strong. So it's a diversified approach. We're not just sitting still and waiting for the timber prices to be strong. It's more dynamic than that. We're a lot more opportunistic and not afraid to sell the land. Because of our network and presence in the region, we typically get pretty good entry points on a price per acre basis, and that allows us to have some good upside, from selling parcels off of the land. Smaller parcels, breaking it up into smaller parcels in addition to the timber harvests.
So let me see if I understand this correctly then, John. So for example, if you buy a tract of land on the outskirts of a town or a city, yeah, one of the main goals is eventually to harvest that timber. That's kind of what you get into it in the first place.
Sure.
And typically, if most properties are that way. You got like different parts of that are going to be ready to harvest at different times. So that's kind of plan A. But if in the meantime it makes sense and the city's expanding, you kind of land banking in a sense as well, because you can divvy off part of that, sell that to a developer who can then
Mhm.
build multifamilies or residential or industrial or whatever however the city's expanding. That's another option there. Or depending on where it's located, you might subdivide little parcels and sell acreages for more recreational users. Is that the gist?
You nailed it. Yeah. So yes, you explained it very well. Because of these size tracts that we're buying, a couple hundred acres up to 1,000 or so, our buyer pool is much larger,
Yeah.
right? That size is able to be used by all those different categories that you mentioned. Businesses looking to expand, developers, or even a family that just wants 100 or 200 acres outside of Atlanta or Charleston. to build a home on and have a place, outside the city for recreation. That's a big part of our market. Big part of our business is selling those recreational tracks. I mean, you'd be surprised. I mean, there's a lot of demand for them for people looking to get out of the city.
No, I would imagine. I would imagine there would be. And when you're selling the recreational tracks, are you harvesting first, or do they pretty much they want to buy a mini forest themselves?
Yeah, so in many cases we don't have to harvest because they like having that timber on the property,
Yeah.
right? Because it can take, some years for that timber to mature, and these properties are beautiful as is. And so a lot of, there might be some type of cut that we do which lends itself, better for building a home,
Mm.
so we might do that kind of cut, but in many cases when we're selling to a recreational buyer, we leave it as is.
Very, very cool. That's an interesting strategy. So it's so much more than just the timber itself. That's why I think you say a land and timber company or timber and land company. Yeah.
Yep.
Very, very cool. So I understand you guys work with investors as well. So from an investor standpoint, is this a tough sell? Do people kind of get the gist fairly quickly? And I would imagine like one of my erroneous assumptions was, okay, well, you're buying this, but you're going to have to wait 10, 15 years before you start seeing any profits off these properties, depending on how mature the timber is. So how do you walk investors through how they're going to get a return on their investment?
Yeah, so that is a misconception, and it's valid because a lot of these, if people have looked into the asset class, these bigger funds, these bigger institutions are typically 10-year plus funds that you invest in.
I would imagine,
Unless
yeah.
unless you're buying one of the publicly traded timber REITs, there are a couple of those, but you don't have the same tax benefits, the direct exposure with that publicly traded vehicle. But if you're going into any type of big institutional fund, it's a 10-year lockup. In most cases, retail investors, like me, right, can't get access to those institutional funds anyways. And so
Right.
with our fund, we wanted to come out with something different. It's a much shorter commitment. We generate returns, fairly quickly with this diversified approach. We look to sell some portion of the land fairly quickly within the first year of owning it. We look for that timber harvest if the price is strong. We're leasing the land out for recreation, which we get cash flow from, if we're not
Oh,
selling it. And
I'm quite leasing it out to who? Who leases this for recreation?
yeah, so hunting is big in our
Okay.
region, and
Yeah.
so we lease out in our fund 100% of the land, believe it or not, and we have
Wow.
more guys knocking down our door on a weekly basis looking for land to lease, and so that's a very strong market. It's
So
not going to
basically
make you.
they own their own 100 acres that they can, well, don't own, but they lease their own 100 acres that they can go hunt on, or 200 acres, or however that looks like. Is that what I'm, is that what
Yeah,
I'm, yeah? Okay.
exactly. I mean, yeah, we'll say, hey, you can have this 100 acres to lease, to hunt for the season, and they pay us, cash to do that. That's not something that's going to make you rich, is leasing
No.
the land, but it's something that helps with, some expenses with the property,
Well, I was
property
going to say it helps keep
taxes.
the
Yeah,
lights on, but there aren't any lights to keep on. So,
right, right. Right. We also sometimes buy property that can have some farmland on it. We can lease
okay,
out the farmland, which those
that's
rents can
good.
be much stronger than recreational leases. So no, I mean we've already generated returns, for our investors in our current fund, which we started raising for at the beginning of last year. And we've already, returned some capital, generated returns with this approach.
So with this kind of investing, John, it sounds interesting, sounds appealing. That's why you're doing it. Can't all be sunshine and flowers. What are some of the downsides and what are some of the risks?
Yeah. Yeah, there are risks. I mean, a big one, and something that we pay close attention to is, sometimes these sawmills can close down.
Mm.
And if you buy a property that's dependent on maybe one or two sawmills and they shut down, because a lot of times they're owned by these publicly traded companies, and if that one's a dated facility, they might just shut it down and build a new one somewhere else. So that's something we pay attention to. And the reason we like Georgia is when we buy a property, we typically have 6 to 8 or 10 different mills within 50 to 100 miles. So something for your listeners to be very mindful of, if they're interested in doing this themselves, is if you go to some of these small, these states with smaller timber markets, and you say, hey, this is a property here, there's a sawmill down the road, just make sure that, that's
there
going to
be
be there
three
for
or
a while.
four sawmills down the road, not just one. Yeah.
Right. That's a big one. There are natural disasters that,
I'm thinking forest fires. What about that? Like
yeah, forest fires. We had some, earlier this year, down in South Georgia. None of our properties were affected by it. That hasn't been, too big of a risk in the last several years, but we had a little bit of a dry period, and that did kick up. We've had, these hurricanes, Hurricane Milton, Hurricane Helene in the last couple of years that took out some timber. So natural disasters, not much you can do about that. What we do to mitigate that risk is we're diversifying where we're buying properties. We're not buying it all just in one location. We're buying in many different counties throughout the state. And it often happens with these natural disasters that they hit in one area really hard. And so, we diversify and not put all of our eggs in one area, all our eggs in one basket. So yeah, the sawmills, natural disasters, just like all real estate, overpaying. That's a huge risk. And, fortunately with our team, we've been doing this a while. We have a good handle on what these assets are worth, but, those are just a few, big ones that come to mind. Yep.
Yeah. Well, I live up in a heavily forestry related area in British Columbia, Canada.
Sure.
So
Yep.
fires are huge. Just seem to be getting bigger. Pine beetle infestations, things like that. Is there any kind of insurance for you guys for those kind of things? Or I would imagine that'd be very difficult to get insured for.
Yeah, there are products out there, but they're very expensive, and
Yeah.
they're so prohibitively expensive that it doesn't make the investment, make sense. So
Having that kind of checkerboard approach where you got all sorts of different plots in different areas spreads the risk, right? So it's
correct.
diversifying geographically. Yeah.
Yes. Yep.
Interesting. Go ahead.
Yeah, and that's only possible with a strategy like ours where we're buying these smaller tracts. The big institutions, they typically go buy 10,000 acres in one area. They're doing that in several different locations across the country, but even still, they could have a disaster in that one county where they bought, and could take out that whole investment.
Yeah, for sure. Well, this is fascinating, John. Thank you so much for kind of sharing this. It sure as heck ain't new, but it's new to a lot of us, this approach to investing in real estate. Who are you looking to connect with these days in 2026?
Yeah, so we're looking for partners for our fund. For many years we did friends and family deals with our personal network, and for the first time we're offering our knowledge of investing in this asset class, our network, our deal flow to investors from outside of our network. We have the Southview Timberland Fund, which we launched at the beginning of last year. So yeah, for anybody who's interested in learning more about the asset class and how they can get involved with us, we're looking for high net worth accredited investors who are currently in the fund. Family offices and registered investment advisors are also in the fund currently. So, anyone in those categories are a good fit.
And where should they go to connect with you?
Yeah, it's easy. Go to southviewtimber.com, and there's a contact form on the website. Just send us a message through the website, and one of our team members will get that, and we can schedule some time to see if there's a fit to work together.
John, thanks for being on the show.
It's been a pleasure. Thanks so much for having me, Dave.
All right, everybody, take care. And again, we'll see you on the next one. Bye-bye.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.